Hello, everyone, and welcome to the monthly market overview. This is November 30th, 2013. I hope everyone had a great Thanksgiving and that you're ready to take a look at the markets. We're going to start off with the euro on the monthly chart, just to say that there is still no change here. You can see that this has been a tightly kind of wound correction. We've had very large ranges here, and then it's starting to decrease in size in these ranges. So for now, the market seems to be up. We'll go to a daily chart, and you can see that this is what we've been looking at, all this very sporadic up and down movement in the market, straight up, straight down. Right now, we can see that the price action is above the alligator. We've had two bearish divergent bars. The last one hasn't been hit. We don't know if this one's going to be hit. If you are long from the current fractal here, just make sure that you're using a stop that works properly with your account size. One of the things I want to talk about during this market overview is the type of markets that we're in. And we have been in very difficult markets for many months. If we go to these larger time frames, you can see that we're in B waves, B wave, B wave, B wave, which is a very dangerous place to trade. So when we have that kind of information, we need to trade accordingly on the time frame that we trade. If we're daily traders, we need to use tight stops. If we're intraday traders, we also need to use these tight stops. This is not a time to let profits run. This is a time to be in a defensive mode and take your profits off the table. Because as you can see, as we start going through these markets today, and as you probably know from your own trading, there's been a lot of volatility and markets don't really have a clear direction, of course, except the S&P. We'll talk about that as well. So be sure that we are using good stops, that you're making sure that your risk is appropriate for the reward that you're looking for when you're taking a trade. And now is a very good time to be very particular and look for those good setups, not just be taking any trade because you want to trade something. So on the daily chart, again here, still in that larger degree B wave, so we're not sure how far this market could easily come to this previous top and then turn around. Again, we do not know. It doesn't look like the correction is over, so we're going to just have to follow the chart and trade the market that we're on. Let's take a look at the Australian dollar. Australian dollar on the daily chart, you can see we had a very large movement down, a 3, 4, 5 on the bottom. We've had a clear, it looks like an A and a B, but now when we have this kind of behavior that goes straight up and straight down, I like to go to a larger time frame and see what am I looking at. And apparently here on the Australian dollar, it looks like we've had an A wave, we had a 3 up, an A, a long B, and a possible C down. So if this C is finished and this is a 1, this makes sense that this would be a 2 because 2s retrace very fast in time and price of the next wave up. So if that's correct, or the other alternative is, of course, is this is a 3 of C, 4 of C, and we're going to have one more low. So those are the two alternatives. I like to look at the market both ways to see what the better opportunity is, but to always be open to what the market's going to do. So if this is a new wave 1 up and 2 can retrace almost to the bottom here, and then we'll start to see a brand new direction. But again, we're not sure yet, so we're going to have to follow the chart that we're trading, the time frame. If you're trading a daily chart, you would obviously be short here. And at this point, we did have a bullish divergent bar, but I would give it a little room, maybe give it 2-bar trailing stop or a green line. After the market opens on Monday, if we have another nice down day, you might want to consider keeping your stop 1 or 2 bars trailing back, just in case this market turns around. If it is a wave 2, it's going to turn around very quickly when it hits the bottom. Next market we're going to take a look at is the Canadian dollar. And just briefly, I want to mention this. The reason why is take a look at this weekly chart. This is what I'm talking about, this long correctional waves in and out of the mouth, in and out of the mouth. Now on the weekly chart, it has broken out. It's come through one of the fractals and almost to the second fractal, but you can see back on the daily, this has been a very difficult ride. So if you're short right now in Canadian, that's great. If that's the only place to be. But again, I would want to use a pretty tight stop here, maybe 2 bars back. Green line is a stop close only, so I would be a little bit careful with the stop close onlys when we're still in corrections, just in case markets turn around. But a 2-bar stop or just a straight stop on the green line may be something that works well for you if you're short here. And if you're trading a smaller time frame, of course, your stops are going to be much closer than they are on this time frame. And we're going to take a look at gold. Let's go on up to the monthly time frame on gold, and you can see that we still have that large 3, A, B, C. It appears that if this is 3 of C, 4 of C, we're still looking for 5 of C down. That's the most probable scenario here. to see one more low take out this low here at 1,179.40. So if that happens, once we see that, we will start to be more aggressive towards the upside, because that will look like more of a complete correction, maybe retracing that 50%. So it is possible it goes further than here for retracement. And then again, if we see that C wave, we're going to be more confident for that next ride up for wave 5. When you go to the daily chart, you can see on the daily chart that here is that long C down, A, and this is kind of a strange B. So we are aware that this is much more, this B is outside the alligator and has a lot more volatility than most B waves. But we still feel like this is a B wave, so there's a good possibility that a C wave will happen up above the previous A. So A, B, C of 4, and then that last wave down. Now, if we're wrong and this was A, B, C, and this is just a very slow movement down, either way, once it breaks this low, we're going to know. Until that happens, we don't know if we're out of the B wave on this side unless we see the C wave up. So on the daily chart here, we're following along. If you were short, we had several fractals. We had a fractal here, we had a fractal here, we had a fractal entry here. So there's many fractals. You can see the market is pulling up, getting closer to the alligator now. We did have a bullish divergent bar with some angulation at this point. If you used that, you were stopped out on the next day. However, if you didn't, you're still in this market. I would be looking for probably a 2-bar back or a green line, so either one of these to protect what profit you do have in here, again, because we're not exactly sure where we are in this wave count. If you go to a smaller time frame, something like a 240, a 4-hour chart, you can see this play out a little bit better as far as the 5 waves down. We have the correction here, still looking for that C wave up to happen. Next market we're going to take a look at is going to be the silver. And we'll do the same with silver on the monthly. You can see the same setup here. We had the large wave up, A, B, C, but it also looks like we're at 4 of C and we still need that 5 of C to complete our wave. So we're going to see if that happens here. If we get 5 of C down, again, very aggressive going up once that happens. Notice that silver has retraced more than 50%. It's gone to the 62% retracement area here. So we are getting close, I believe. I know the AO is green and it's increasing, but according to Elliott wave rules, we still have one more to go. On the daily chart, you can see the pretty much same formation as gold. This has been very interesting, though, because this is not B-wave behavior on the daily chart. So there's a possibility that this was a strange A, B, C here, and this is coming down. Again, we just have to pay attention and watch the market and trade the time frame that we're on. A monthly chart is a large time frame, so it can take quite a bit of time for that to play out. In the meantime, we're trading the smaller time frames. We want to take advantage of what the market has to offer us. Okay, the next market we're going to take a look at today is going to be crude. And crude has been quite the volatile market as well. You can see with the size of these bars, the ranges coming in the mouth, quick move down, bounce up, and then kind of sideways. Not a lot of action the last couple weeks until the last few days last week, and then we saw a push. It's created a new fractal down. The alligator is open below, but we do have some divergence here on the AO. So I want to caution you when we have divergence on the AO on the daily of getting aggressive going short again. You might want to look at this on a smaller time frame, be able to take advantage of that. But if you are short on the daily, crude can turn around quickly. As we know, this market is a volatile market. So just make sure that you're locking in profit and taking it off the table right now. We don't have any clear trends, so small, consistent profits do add up. Next market we're going to take a look at is going to be the 10-year. And let's add some bars. Okay. 10-year has had a nice, big, huge ride down and then very fast started retracing upwards. We saw it come all the way up to here about the 126, and then now we are in a tight, looks like a B wave, right? Very clear B wave action. Markets intertwined with the alligator. We do have fractals on both sides. I would be careful here because you could get caught in this trap. I would tend to use some outer fractals and try to have less risk until we see another clear direction. If you trade a smaller time frame, of course, you will have the advantage to go in a little closer and take some profit out and not have such a wide range of your risk. Let's see, the next market we're going to take a look at today, let's look at soybeans. Okay, and soybeans. Excuse me. Beans had a very, very fast, quick ride up and then retraced halfway back down of that move, went into a sideways, in and out, irregular looking like correction with these triangle patterns with the fractals. And now we're back outside the mouth. Alligator is open. We did have a bearish divergent bar here on Friday that had angulation, or on Thursday, I'm sorry, with angulation. Had you placed your stop, of course, it didn't get hit. Market continued up. So, but there was some angulation. The distance between the green line and that BDB was a good bit, and you can see that you had very large bars coming out of the mouth quickly. So somewhere like over here, when you see these type of BDBs, typically in the grains, these are very good places to exit and even sometimes obviously stop and reverse. So if you're long soy right now, we don't know where it's headed, but that's the only place to be. I would keep a stop, you know, one or two bar trailing stop, or green line is too far right now with the type of market that we're in. I want to lock in my profit. So probably, even though the 1 and 2 right here after the market opens, that might be a great place to put a protective stop in case this market turns around quickly. And the next market we're going to take a look at today, I haven't looked at cattle in a long time. Let's see what cattle looks like. Cattle has been in a strong movement up, but you can see this self-similar repeating pattern. Comes up, back into the mouth, up, back into the mouth. We come up, into the mouth, and now we seem to have a larger degree correction here. So looks like we may have a complete wave here and starting to correct A, B. A little bit dangerous on the daily chart. Again, this might be when you want to go to a smaller time frame or wait for the outer fractals to pass, because it currently looks like we're in wave B. And let's see, we've looked at most of the markets today. Let's take a look at the S&P, one that I know everybody's curious about. E-mini S&P, up, up, and away. What can you say? This market has continued to go. Let's go to the monthly chart briefly, and you can see that we had quite a movement up. I mean, this has just been straight up parallel. Alligator's wide open. The AO is increasing. We have no divergence here. So it is apparent that, of course, we need a correction, then one more push, according to the AO. I do believe that we may see a correction sometime starting here in December. I don't know exactly why, just maybe a little bit of intuition watching these markets 20 years. When we go to the weekly chart, you can also see that this movement has been very strong. This looks like the last push-up, possibly 5 of this wave. If we create the divergence on the weekly chart, we'll have to see if this continues or not. But on the weekly chart, we do have a BDB. And when we go to the daily chart, you can see we also have a BDB. We do have some divergence here. Alligator's just starting to have a little bit of a look of a turn. I do believe with the market that's had this kind of up, 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 and away, it's probably going to have a very quick, fast retracement down. So for those of you that are have long-term 401ks and things like that, you know, you may want to look at some other things. You may want to just realize that this market is probably going to have quite a bit of a retracement. If you're trading it, no problem being short. We enjoy it. We really don't care where the market goes as long as it's moving and that we can be a part of it. So that's going to be the market overview for this month. I hope that it's been helpful. Remember that, again, that besides the S&P, this is really, or the indexes, this is really the only markets that are trending. Most of them are in large degree corrections, so be sure, take your money off the table. Don't be afraid to take the profits. We know that there will be some trends coming. The one thing about a correction is we know what comes after it. Patience is the key. This is a hard time for traders to be patient. They want to be in the markets all the time, and when these markets are like this, it's much more important to have quality trades, not quantity of trades. So be sure to pick your trades, risk-reward ratios that are working well for you, and most of all, have fun. We want to wish you all a happy holiday season from Bill, Ellen, Marcus, the whole family, the Profitunity. We hope that this is the best holiday you've ever had, the markets treat you well, and may all that you wish for be the least that you receive.